Hey, Modern Commerce. Welcome back. You're here again with Kelcey and John, my partner in crime. We've got a fun interview for you today. I'm going to go ahead and pass it on over to John so he can get this introduction underway. John, take it away from me, man.
Thank you. I'm excited for our guest today. Guest was referred to me by a person I really, really respect in the industry. Spent a couple minutes getting to know this man the other day, and I'm like, hey, he's the real deal. We got to have him on the podcast. So Mr. Kelcey Lehrich, the co-founder and CEO of 365, not 365, of 365 Holdings, holding company that holds, as of today, when we're shooting this, 8 e-commerce brands, correct?
That's correct. And the math adds up, whether you say 365 or 365. I'm good either way, but thank you. Glad to be here. Thanks for having me.
It sounds better when it's 365, though. Like, it just rolls off the tongue.
If I had $1 for everybody that called it 360 Holdings, I wouldn't even need to be on this podcast right now.
Which doesn't make any sense to me. Like, everybody, I don't know.
The amount of thought I guess that name brand 5 years ago was like nothing. Like, it was like, hey, we need a name for them. Like, we don't need a name. It's not that serious. It's not going to be anything, real known one day. It's just like for tax return purposes. Yeah. Here we are.
Right. Yeah. And now it's known. And I do get it. I guess one full spin, one cycle. I don't know. I get it. Could be 360.
We make money 365 days a year doing commerce on the internet.
Yes. You can sell every single day.
I want Whole Foods to sue me for their house brand, whatever.
Nice. So yeah, Kelcey, give us a little bit about your background, a little bit about you and what you're up to, and specifically the kinds of e-commerce brands that 365 Holdings looks for and targets.
So 6 years ago, my business partner and I bought our first e-commerce business. Prior to that, we did business offline with like small service businesses. And we'd always been kind of entrepreneurs, but the companies were like more of a side hustle. We had 2 or 3, 4 of them that we bought for $10,000 or $20,000, like small amount of money. There was no rich uncle involved. We were just kind of trying to make our way in the world and support our families. And every year we'd make more personal income. We'd maybe grow those little businesses a little bit. But we finally sold the first one for like $100,000. And that was a down payment for 10% on $1 million business with an SBA loan. And that kind of got us into e-commerce. So prior to e-commerce, we were just hustling with service businesses, and e-commerce was an unlock for us to scale. So for the last 6 years, we've bought more than 8. We've sold a couple along the way. We also had a few that just didn't work out. They were kind of small. We've accumulated 8 brands in the portfolio. Team today is over 100 around the globe. We're mostly based in Akron, though, mostly in-house, on-site full-time. We do our own pick, pack, and ship. We do some of our own production and manufacturing in-house, and we're heavily vertically integrated. So we run supply chain, ops, fulfillment, customer service, marketing, really everything we can here out of the office in Northeast Ohio. And we're looking for really high-quality brands that have a long, durable history of profitable operations. And we want to continue that growth by holding those for a long period of time in our portfolio.
Interesting that you went from like doing work in the service industry to like, so you owned local businesses, correct?
Yeah. So we had a business that took satellite dishes off of people's houses. We had a business that processed checks once they bounced. We had a business that sold timekeeping software to like local cities and counties, but we didn't own the software. We were like a reseller. So we had like a lot of these like kind of small B2B or B2C service businesses.
So why jump to e-commerce from there? Like, what was going on in the world, in your world then, that made you think like, hey, we should start selling physical products online?
So I think most people that are in a position like mine have a background of like, oh, I was at an ad agency and I just saw the future, or I was at an investment bank and we were selling these companies and they were really profitable. We had no such foresight. I know the Amazon truck came a lot, so it seemed like that e-commerce thing was going to be big one day. Candidly, we were just looking for a good business. It could have been in any industry at the time. We wanted to have a good purchase that had good economics that we thought we could operate. And it was the first one that came along that met all of our criteria. I wish I had a better answer about the big vision that we had, but candidly, it was very opportunistic. We just thought it was a good business.
Yeah. And I don't know, we didn't talk about any of this online or offline, sorry, which I usually do. I don't know if you're willing to share with us like that work. So it sounds like it's like, hey, something got put in front of you and it happened to be an e-commerce business. And so that's kind of what you guys went with. Are you, I don't know if you're comfortable sharing what brand that was or what it was about it that made it feel like right. You know what I mean?
Yeah. So that business, actually, it's less e-commerce and probably more direct response marketing. I think you and I talked about this offline. We still own it today. What it did though is it gave us a launching pad to build a team and to learn skill sets in and around e-commerce. So about 90 days after we bought that business, we drained the checking account and maxed the line of credit and went and bought another one. And that was our sunglasses brand, which we sold a couple of years ago. But through operating those couple of early e-commerce businesses, we just realized that we could build a team. They were growable businesses, more growable than anything we had done before. And they were skill sets that like we could learn as business people. Like Justin and I are just entrepreneurs as background. I don't think I'm God's gift to marketing or finance. I don't think Justin is God's gift to operation or human resources, but like we're just entrepreneurs. And we realized e-commerce was a platform where we could take just natural talents that we have and we could be successful. We didn't have to code. We didn't have to be graphic designers. We had the skill sets we needed, and we knew there was industry tailwinds for online shopping. And so we built a platform in this space.
Yeah, that's pretty huge. Like, I feel like a lot of entrepreneurs or people who want to start something, they get held up by like just blockers, like, hey, oh yeah, we got to build this app. And once we build this app though, like look out, right? Or we need to go get funding, but like once we get funding, look out, right? And you just saw this industry where, you could start with no code, no like background, you could just start doing it, right? Like you can put something online and sell it and then do it again and again and again without really, and you can fund your own growth, right? Like now I'm sure you guys have custom coded stuff. You guys probably have custom apps on your store, all kinds of things like that. But it starts out with just being able to like, I think momentum is pretty big. I think momentum is one of the biggest things that stops either just entrepreneurial people or people who want to either get into e-commerce, or even people who are looking to do something like a holding company or invest in businesses, even own minority stakes in businesses. Like they just let momentum sort of slow them down. You know what I mean?
For sure.
Yeah. So let's talk a little bit about what you're looking for now, 2023. So we'll talk a little bit about like kind of market conditions because I think the acquisition market was really hot for e-commerce over the last, what'd you say, 2 years, 3 years, something like that?
Yeah, 2 or 3 for sure.
Yeah. So tell me, like, and that's cooled down a lot. A lot of deals have fallen through. Valuations have gone down. So yeah, I mean, give me the state of the union on like market conditions. Are holding companies like yours basically just holding off on buying at this point in time, or what?
There's kind of, in my opinion, 2 parts to the quote unquote e-commerce market. The interesting thing is guys like the 3 of us talk about e-commerce like it's an industry, but it actually kind of isn't. It's a sales channel. There is no SIC code for e-commerce. So all businesses are categorized by the government using a code called an SIC. There is no e-commerce category for SIC. If you sell apparel online, your SIC code is you're an apparel business. If you sell food products online, you fall into a food SIC code. So we all talk about this like it's an industry, and it is, right? We all make a living. We have Facebook ad agencies and we have people that do Shopify development. But like in reality, when it comes to the environment we operate in, we are using online sales and distribution to unlock the ability to meet a consumer and have supply and demand match. And we make businesses on the internet that are really just consumer products businesses. We're selling consumer discretionary goods in a direct to consumer sales channel. What we saw happen though is because that was a scalable model 5, 6, 8, 10, 12 years ago with kind of the D2C revolution, the Warby Parkers of the world, the Allbirds of the world, et cetera, the investors that invest in high growth, so the venture capital world, started looking at e-commerce as potentially a huge growth market. And what we've seen play out is that there's a huge run-up in demand for those businesses, a huge run-up in valuations for those businesses. And you had a fork in the road of like, are you playing a venture scale game with venture scale economics, or are you playing a small business game with small business economics? Because those 2 business plans are very, very, very different. If you have a small business outlook, the way you fund your business, the expectations you have for growth, profitability, the source of the capital that you can tap into, your ultimate exit plan is very, very different than if you're trying to achieve a venture capital scale outcome. And we're starting to see, now that the market's corrected, is that some of those businesses aren't as big as they plan to be. not nearly as profitable, if profitable at all. And the valuations have corrected massively in the public markets. That's come downstream and is now affecting late stage large e-commerce businesses all the way down to startups that try to raise for their e-commerce business. We've always, frankly, like 365, Kelcey and Justin as entrepreneurs have never been really on the venture capital side of that equation. We've been on like the small business side of that equation. So we've looked for businesses that have durable, profitable growth, have sustainable demand from the end customer, can be financed on reasonable terms using debt and equity. And we've never raised any outside capital. We financed everything off our own balance sheet. We've used SBA loans. We've used some alternative financing, but we've been buying kind of traditional small businesses that just happen to do business on the internet. And sure, they grow maybe faster than your average car wash or hair salon or plumbing company. If you think about kind of Main Street businesses, I think our revenue grows faster than your neighborhood coffee shop probably. But our expectations are not these off the chart growth ramps that you'd sell to a venture capitalist. And so we financed our business that way. And I think depending on which corner of the internet you come from, you either think the venture capital world is kind of really normal and that's your echo chamber and everything you see and read and understand is through the lens of super high growth, burning money and build to sell. If you come from another part of entrepreneurship or another part of the internet, that's a foreign world to you. And you think in terms of like, we grow at 10% a year, we use a little bit of debt, a little bit of leverage. We have conservative expectations. We expect cash flow out of the business. We expect profitability every quarter. And e-commerce is this weird place where those two worlds meld really fast. Like in SaaS and software, like they're firmly in the venture capital world. Like it's only very recent that like SaaS has been a cash flow asset, but like, e-commerce really started more so of like these sleepy, boring consumer products businesses that just happen to sell online. And that's more so what we buy. So we've been buying brands that are 5, 10, 15 years old. They've got big email lists. They've got an SEO presence, an affiliate program. We have like really diverse traffic for most of the businesses, some Facebook, some Google. And frankly, like we just wouldn't buy something for our portfolio that's kind of like, hey, we started 4 years ago. It's been 300% year over year. It's all Facebook ads. And now we're trying to get into Target or whatever. I'd say like, hey, that sounds awesome. Congratulations. That's not a business that we can underwrite for our portfolio.
Yeah, we're not the buyer for you. That's pretty interesting. So we've talked about this before in the venture capital world. So essentially, what you're saying is like, hey, you've created a holding company here, and the way that this holding company works and pays its employees and pays you and everything is that all of the businesses inside it just make a profit, right? And you add up all those profits, and that's the profits of the holding company. It's actually a really practical way to go, because you're right. Like there is a whole world of people where the venture capital thing is like very normal to them. I'm not from that world. I don't know if I fully get it, right? Like it just seems like let's place 10 bets and make sure and hopefully one pays off really big and the other 10 can kind of be losers. That's what it seems like to me. And maybe I'm wrong about that, but what you're kind of talking about is like going about building a holding company in an entirely different way, right? Where you just say like, hey, anybody really could do this, right? Like anyone off of, right? Like anyone who's got some capital, or some like credit to get funding or whatever, could buy. And it sounds like it wouldn't even really have to be an e-commerce business, right?
For sure. There are far more people doing the business model that I believe in outside of e-commerce than there are inside of e-commerce as an industry. And the notion of being an entrepreneur by acquiring companies, building a portfolio of them, realizing some diversification or synergies, and building a multi-business career as an entrepreneur is not a new concept. Entrepreneurs have been doing that for a long time. We just happened to do it in e-commerce because the timing was right. The first one we bought that scaled was in e-commerce, and we're having a lot of fun, and there's a big market for it that's growing. So I would agree with everything you said. I also think that I don't pass judgment against like the venture capital side of the world. Like there are different business models for different people. I don't begrudge somebody that has really, really big aspirations to build a big, fast growing business. I do think that it probably got a little overhyped in e-commerce about how feasible or realistic or even advisable raising significant equity is. Certainly like the aggregator term is a newer term in the e-commerce world that kind of was predicated on venture capital scale by rolling up small businesses. I don't think that's our business model. I view our business as kind of like one big platform, and it has many lines of business, many profit centers, each of which is a brand that it owns and operates. I wish all the venture capital backed businesses the very best, but sometimes when they don't work out, we end up getting the chance to acquire them for a really, really reasonable cost. We often end up cutting a lot of expenses, a lot of overhead, kind of right sizing that business because historically, maybe it wasn't profitable or even contribution margin profitable. But on a pro forma basis, it is for us to operate it contribution margin profitable because we can buy it at the right price because it's in a distressed situation. And then we can right size the expense structure and we can have a really great business for us kind of reconfigured in a new platform that wasn't possible under the kind of the prior structures. About half of our deals have looked like that, kind of distressed or turnaround situation where our philosophy of how we plan to operate the asset sets up that asset for a much smaller revenue, much more certain profitable future. With kind of our strategy for running it. And again, I'm not passing judgment. Like if you can swing for the fences and connect, like more power to you. I encourage you to do it. And I'll be really jealous when you cash a big check. But statistically speaking, you're right. Like it's just not that many of those deals end up with those outcomes. It's just kind of the math of how that industry works.
Yeah, I think it's just important to know what game you're playing. And I think it's important for everyone all the way through, right? Like I would almost say that like Kelcey and I both have an agency background, right? Ads agency, digital marketing agency. I would say even at the agency level, it would be good. It's good to at least know, right? And maybe you work with both, but it's good to at least know where they're coming from because it's going to be like two entirely different types of, two entirely different types of like points of contact that you're dealing with. People who want contribution margin, people who want it profitable, don't necessarily care so much about the scale, and others. But yeah, let's talk, let's shift gears here because I have some like more questions around this idea of like essentially creating a little, I don't know, for lack of a better term, like DIY holding company, right? Like something that can actually be done without venture capital, without going and raising, money. What, like, I mean, do you know, I mean, I actually already know the answer, right? But you're actually, I mean, launching a program right now where you're teaching people to do this. What is the typical background and like what's the thing that you're usually saying to look for if somebody's like, hey, I'm looking to buy a business that I don't necessarily want to operate, I want to ultimately add it to a holding company? You know, what are they looking for in any kind of business? And then I'm going to give you a part 2 of the question that you can get into. If it's not the first buy, does it make sense to go into like completely different, like would it make sense to own a coffee shop and an e-commerce store and you know, landscaping business and I don't know, SaaS, if it was assuming it's cash flow, you know, like, does it make sense to own a whole bunch of different kinds of businesses or should they be somewhat related or what?
Yeah, that's a couple of good questions there. I'll take them in a couple different directions. So I started in the past year, 2 businesses that are kind of more, it's my first real passion project. So like 365 is a passion business. Justin and I love our culture. We love our employees. We love our business model. But the businesses that we own, the actual brands we operate, as long as they're good, ethical products that like provide a gooder service, I don't have to be passionate about them. Actually, it'd probably be bad if I loved one of our brands because then I would spend all my time on it instead of worrying about our team and our overall financial objectives. I'd have like my pet favorite one. It's like, I think they're all good brands. But they're just kind of widgets, right? We need to produce a product and service and meet customers where they are and create value in the world. In the last year, though, I started 2 new businesses, and it was the first time I've ever started something. And we actually partnered with some outside people on both these businesses. So one, last year I started a conference for holding companies called Holdco Conference. We get together multi-business entrepreneurs, those that want to have a career running 2 or more businesses. That conference was probably less than 10 or 15% technology. So like, and you include all the SaaS people, all the e-com people, all the people who look and smell like a technology or venture capital type of entrepreneur. That was like 15%. The other 85% was like trucking, manufacturing, restaurants, plumbing, HVAC, tree trimming, just all kinds of great businesses. And so I certainly come at e-commerce as more one of those kind of entrepreneurs of like, would Kelcey go buy a nuts and bolts business offline? 100% I would. I would absolutely diversify into other things. Is that advisable for somebody in your audience? I've got no idea. So it's kind of a question of strategy and goals and knowing yourself of what's a good career path for you as an entrepreneur. Is your secret sauce running ads? Is your secret sauce doing product development? Or are you a purebred entrepreneur that, like, for the love of the game, wants to just run businesses? And that's just kind of like a personal decision. For me, like, I would love the new challenge of like a plumbing or HVAC business and like learning all the challenges that are very different than like a technology first company. For sure. That's me. The other kind of like passion business I started recently is actually a course in acquisitions, a course in a community. So over the last maybe 10 years between Justin and I working as a team and my experience prior to him and I working together as a business broker, take the business broker out of it and just look at us as principals, as entrepreneurs who are 50-50 business partners going out to do acquisitions. I've always been kind of the visionary partner, ideas, strategy, financing, growth, relationships, marketing. And he was kind of the operations integration guy, hire the team, run the process, hold people accountable, like run the system. And together we've bought and or sold like probably going on 20 businesses. Today we're in that e-commerce world with 8 of them. But we've learned a lot. We've made a ton of mistakes, like broken all kinds of rules, done a lot of dumb stuff, lost money. Like we've done every mistake there is. But thankfully, we also have this like success story of like 8 brands, a good team. Like there's some real progress we've made, and we're really, really proud of that. And so we've taken that and we've packaged it into a course in entrepreneurship around either I've never bought a business before and I want to leave my corporate job and go buy a company. Like what do I start? How does that work? How do I finance it? Like that's a perfect avatar for that business. And the other is like the entrepreneur who has a business, but has never bought one. Maybe you inherited it. Maybe you started it. Maybe you worked your way in as an employee, but like you don't have a deal making background and maybe you see these listings on the internet and you're kind of like maybe conversational, but you just don't know where to start. And you need like a mentor and a training process and a proven playbook. So that product is called Masters in Business Acquisitions. It's part course, part community, part mentorship. So
Gotcha.
it's very early on. I'm actually still working with all the students kind of on a one-on-one basis on their deals, but teaching the entire playbook of acquisitions and then helping people one-on-one find deals, finance deals, get deals closed.
So give us a little preview here, like what, and it probably depends on what my background is and stuff like that. But let's say,
let's use you. Let's make it real.
Let's use me and let's and I mean, because a lot of our listeners are going to be kind of similar. So I have a background working at companies and owning companies. I've owned and sold an agency. I did sell it. I put that in quotes because it was like not this huge thing or anything like that.
I've done that a few times. I get it.
Right. Yeah. It's like, I sold it, but it sounds a lot cooler than it is. Yeah. So I've owned and sold an agency. I've always bootstrapped everything, really never taken any funding. I have like a $7,000 line of credit at the bank and I don't even really use it. So like everything's always just like my own money. So I mean, I guess that and then but also I kind of like contract and work for other companies as well, right, as a freelancer or contractor or consultant. But yeah, let's say I come to you, I'm like, hey, I'd be interested in this. You know, what it can't do for me is take up a ton of time. And I'm relatively risk averse to taking on like large amounts of funding that I'm going to have to pay back or whatever.
So using that as the example, what would you want to buy? What is your goal or aspiration in that context? And if you want to keep this completely personal, go ahead. Right. If you want to make this theoretical, that's fine too. But like, I'm going to walk through a path real quick with you. Yeah.
So theoretically, let's say I want to buy like, hey, I do want to buy businesses. I'm not entirely risk averse. What I would like to buy is assets that cash flow with relatively small amount of input from me, you know, to operate or to own them. So sort of like, you know, the reason people get into real estate investing, right, is because they can buy asset that will cash flow pretty much instantly, and it will do so with not a lot of input from them, right? So that's the same kind of thing I would maybe be looking for in buying businesses. Long term, I would like it to be enough cash flow that it's like all of my, you know, I could just do that and do nothing else, and I would be fine financially, but also, you know, I could not do it because it doesn't need me, and I can do the things that I really like doing with my, you know, working time. I can work on my podcasts just
absolutely.
all the time.
So the one thing I usually am real quick with is the idea of like this perfect passive absentee money machine business is usually more often than not kind of myth versus fact. Usually,
Okay.
a lot of things that sound too good to be true, kind of get rich quick kind of stuff, usually turns out to be what you think it is. Not to discourage people from looking at buying a business, but like just super candidly, like small businesses are a lot of work. Ones that are worth buying tend to need a lot of TLC to operate them. So I've bought businesses ranging from $10,000 of purchase price up to like $4.5 million of purchase price and everything in between. I will say that once you have a running business, buying additional businesses that work with that platform is much simpler than buying the first one. So like getting your first agency off the ground and then you go buy an e-commerce business that's one of your clients, like that's a super great play to run. If you want the passive income, live on the beach, 4-hour work week kind of lifestyle, it's hard to do with a business.
Yeah.
I'm not, go ahead.
Yeah. Right. Yeah. And I would say myself, mic came unplugged, a little technical difficulty here.
You're good.
Stand by.
Yep.
I would say myself, most of my listeners probably don't necessarily want like full passive income, 4-hour work week, live on the beach. Like that's not what I'm talking about. I think I'm talking more about like, I couldn't be the long-term operator or let's say I'm going to go buy a plumbing business or a coffee shop or like, I'm not interested in like being the operator of that business on a long-term basis. Now, if it takes me for a few months or whatever, there's a timeline.
The first one you should buy is one you can run. The first business you buy, you should be able to operate. So if you're a digitally native person, you're listening to this podcast, your first business should be a content website or an FBA business or an agency with 3 clients that does podcast post-production or like something that you can do. Businesses tend to trade in such a way where like, especially when they're small, if you're not going to have a $2 million loan with a big down payment and an SBA guarantee and all this kind of stuff, you're buying like a small nuts and bolts business. Most of the cash flow goes to the people doing the work. And so can you jump in and work nights and weekends for 3 months and build systems, maybe have a VA automate some things and go fix some technology and do a little biz dev and like get the thing running and know that if worst case happened and like your team left you and you could still run it, or if you lost your job, you'd have some income and you could like scale down your team and pay yourself more. Buying a small company is probably the best move to start with for somebody that's really risk adverse. Broadly speaking, though, I'm like, my number one advice is shop bigger. For people that really, they have the risk tolerance. They say, you know what? I am an entrepreneur. I want to run a company. I know that one day I will have many employees and I'll be a successful business person. That is my future. To that individual, I say, pull the Band-Aid off, go big or go home. Like, do this faster. You will make more progress and probably be more successful with a bigger business than stepping stones. To somebody who's risk adverse and kind of wants side income or wants to scale up, like nothing wrong with that, like no judgment at all. To that person, I would say, make sure you can operate it. Like if you can't go to the coffee shop because you got to be at your job, don't do a coffee shop. Buy a blog or an Amazon business or like something that you could do from your cell phone. That way you're going to feel much safer with that investment.
Yeah. And that's kind of what I was like getting at or thinking about too, is that like, I think dead on, if you're risk averse, if you've never bought a business before, it is doable, right? It is, doable to build this whole sort of DIY holding company. But you probably,
that's why I bought the first one. Like I had no idea what we were getting into at the first e-commerce business. I just knew between Justin and I, like we could figure it out. The thing,
and you had the time to put into, you had the time to put into it.
The way the economics worked, we were going to get our investment back within months. We were actually going to give ourselves raises based on the cash flow. Like we were comfortable signing the loan. And so if you're comfortable doing that and you buy a business you're willing to operate, like you should be really well paid in your first year of small business ownership. Is it risky? Sure. If you fail, the bank will come for you. Like there's a guarantee on those loans. If you're willing to take that risk and you know that you had put in the hustle and you understand the business and you're comfortable with it, like you can get paid handsomely to run a small company. You just got to make sure you're able to do that work.
And I like that, right? Like if you're risk averse, make sure it's one you can run, like you can essentially hire yourself. Right.
Correct.
The other thing that is, I think probably if you're in that position you're probably 2, maybe 3, maybe only 1 business purchase away from being the other person that you're talking about. And saying
100%.
you're going to buy bigger now, and you're going to like,
Mhm.
hire people to operate it right away. And you're not going to really step into
My
this as much.
my downside is I packed the last box here and shut off the lights if it all blew up. Justin and I high five, and like the last shipment leaves is our downside. Our upside is we have tens of millions of revenue and employees and like a real like business we've built, and it compounded through time. 100%.
Yeah. Beautiful. So, and then tell me about finances. What do you tell people to look for financially, in their first acquisition? And I don't want to like kind of stereotype the kinds of people, who would be interested, but
Yeah.
I'm going to guess it's a lot of people who are already in pretty well paying jobs, but are interested in entrepreneurship, but want to keep their job, right? Because they're either happy with it or for security, or people who are already entrepreneurs of maybe like one business. And they're like, how do I, leverage what I'm doing here?
If you're in a job, the real question is, do you want to buy like a side hustle stream of income, or do you want to change your career? Because that will just really impact which path you go down. I do think you can search for a business nights and weekends. You have a family, it'd be really, really tough time-wise to work a full-time job and take care of yourself and your kids. Like that'd be hard to do. It'd be a lot of nights and weekends. But I do think you can buy your first business while employed. I think that's very doable. I would just be actively deciding based on your risk. Do you want to buy small and side hustle and be able to scale? Or do you want to make a jump? Do you want to make a career changing, life changing jump? And both are good depending on your own circumstances and your decision. If you own a business, I think there's a ton of strategic small acquisitions that you can do. You've probably thought about, you just might not know like the first steps to take. But like if you own a roofing company, you should go find a siding business. If you own an agency, you go find an e-commerce business. If you're doing paid ads, you should learn SEO. Like there are so many ways to bolt together small businesses. And if you are listening to this podcast, you definitely know the softwares, how to hire, how to train, how to use VAs, how to automate things to like benefit yourself when you do that. We definitely see a lot of synergies in the businesses we put together on a shared services model. And I think that entrepreneurs that have an existing business, growing through acquisition is fantastic.
Yeah, no, I agree. Is there a certain turnaround time you're looking for, right? In terms of like turnaround time or terms or anything like that? What are the major, and maybe you can't get into it because maybe it's too many things, but like, what are the major things I need to think about? Like, how much am I buying it for? Here are the key terms of the deal. And here's the turnaround time of like what it's doing now if I step into this,
Super, super situationally dependent. What I would say, the most important thing with that type of question that I really harp on for people is just being incredibly clear about your goals and aligning what you're chasing against your goals. Like there is no right answer. Like the right answer could be none of the cash goes in my pocket, it pays itself off in 3 years, and that's a big win. A different answer could be I'm going to hire somebody, they're going to run it for me. Like there's all these different variations that are incredibly specific. What I would say is just like be really, really clear. Like figure out, do you want to leave your job or do you really want that side hustle? And like make that decision before you start kicking the tires and you're going back and forth and you're talking to your wife and like, do we really want to do that? Like figure that out and then go start looking. The more clear you can be about what you're trying to accomplish, the better and more productive that experience will be. Yeah,
got you. Let's talk, let's shift gears a little bit. I want to talk about maybe in e-commerce, focusing on e-commerce, since so much of our listeners are e-commerce. We've been talking about acquiring businesses for a minute. What do market norms look like today? So for operators who have been looking at exits over the past few years, I think valuations are a little bit different. I think what they're optimizing for is a little bit different. What do you think is, I guess outside, maybe you can't speak to the venture capital world, because I think that there's a little bit just more of a freeze there, right? Like there's just not as many acquisitions happening there now, but in terms of like selling a like cash flowing profitable business, what does a norm look like in terms of valuation, debt, equity, all that kind of stuff?
For sure. A great resource for this. I have no financial affiliation here, but if you want to check out a resource, there's a piece of financial software from a couple guys at a company called Bainbridge, and they keep an index of all the publicly traded direct-to-consumer brands. So Google Bainbridge D2C index is pretty helpful. and you'll see it plot a chart of stock prices for the public companies. And the reason that's important is because their prices affect everything below them. And so the late stage private equity owned companies trade based on public comps. The late stage private equity companies impact how the venture capital guys raise their rounds, impacts how the brokers sell the small businesses, impacts everything down the ecosystem. So it's helpful to just kind of know directionally where we are today versus where we were in a different period of time. If you have an e-commerce business that's 7 figures in revenue and it's got a reasonable profit margin, it's a couple years old, it's probably going to trade at regular market norm prices, 3 to 5 times EBITDA. Those prices are condensed. They're not as high as they were. If you had an offer 2 years ago for 5.5 times EBITDA, it might be 4 today. It might just be the market price. Does that mean your business isn't worth that anymore? It just means it's not worth that today. What it sells for today at a moment in time is today's value, and it's a function of where the economy is, where interest rates are. If interest rates go down and growth starts accelerating, you could find that 4x fair value today is 5x in 6 or 12 months. It's probably unlikely. I think we're looking at lower valuations the next 12 to 24 months, maybe longer. But the non-venture capital type small business e-commerce businesses, 2 to 5 times cash flow with a lot of detail into why it's 2 or 3 or 4 or 5 times. Anything beyond that, you really have to be growing incredibly fast, have a really compelling story and a really interesting reason to get acquired for a premium multiple. This is for the context of like most people listen to this podcast. If you've got a $28 million revenue business that was 18 million last year and going to 67 million this year, that answer is not for you. You probably have an investment banker. You probably have a much better idea of what your business is worth. But that person is not getting the same advice as a D2C SOC company doing 3 million in revenue.
Right.
A D2C SOC company doing 3 million in revenue is going to trade for 3.5 or 4 times earnings, some like market multiple. It just is. Small businesses trade for 3 to 5 times. And the higher interest rates go, the harder it is to get those premium prices. You're going to need to bridge value of seller notes, and you're going to make sure you're qualified to be bought by an SBA buyer.
Right. Beautiful. So, yeah. And before we wrap up, I don't know. I want to invite Kelcey back in, ask any questions he has. Yeah, Kelcey, you got anything? I see you're back.
Come on in, Kelcey. Don't be shy.
All right, we've got kind of a tradition on the show for one-off.
I wonder prepped for this.
That's okay. Yeah. Hey, this is what we do. We come from left field a little bit. Yes. Are you a sports fan by any chance?
I am not.
I'm not a sports fan.
I don't know anything. I can go get my business partner, and he could probably answer the question. Did I just ruin the show?
Yeah, show ruined. Show's
completely
over.
ruined. End broadcast. Everybody leave. No, it's all right. Kelcey, anything else that you've got?
What I'd ask you to do is do this last segment that we do on this episode called a parting shot, which is if somebody were not watching the rest of this episode and you had to give them the too long didn't read version in like a minute, 30 seconds, something like that, what would you say to somebody who just clicked on now that the condensed version of what they could have learned from this whole episode?
Acquisition entrepreneurship is hard but rewarding. Valuations are down across the board, especially in e-commerce, so it's a great time to buy. And I would encourage anybody interested in buying to do some deep work on themselves to understand their goals, their aspirations, their risk tolerance, and kind of calibrate their expectations for buying a company against those things. And if it's a good fit for you, it's a fantastic way to make a living. It's a lot of fun, and I'd recommend it to anybody that thinks they're cut out for it.
Beautiful. Wow. And I actually think that was great. And it's funny. I don't mean to double down on parting shots here, but I was actually just talking to somebody about like AI, artificial intelligence, right? And like what it's able to do, and the way that it gets kind of what it needs. The way that it creates its output is with input, and like it serves what you want, right? And so I think a lot of people don't think artificial intelligence is very good because they're just not able to give it very good inputs, right? Because they're not very self-aware of what they want. Yeah. So in a world where AI did a lot of things for us, theoretically, as humans, we would just have to be much more self-aware of what we really want. And I think that's exactly what you're saying here, is that's like self-awareness is the biggest thing that you need as an entrepreneur, and especially as like a multiple business holding company entrepreneur. So fantastic. Kelcey, thank you for being on today. Quick second here. Tell us where we can, I know you mentioned you have a course in community. MBA Acquire. Tell us where we can go sign up for MBA Acquire, learn more about it.
Yep. If you want to learn about buying businesses, mbacquire.com is a course and community on acquisitions. If you already own multiple companies, come check out Holdco Conference at holdcoconf.com. And if you just want to talk to me for any reason, find me on Twitter. My DMs are open. And I love chatting with other entrepreneurs, so reach out anytime.
Cool. Thank you. All right, Kelcey, restart the music, say the YouTube things, and bring us out.
All right, Modern Commerce, thank you for watching this episode of our podcast, or listening if you're listening on Apple Podcasts, Spotify, one of those audio-only platforms. If you enjoyed it, please give us a like, rate our show, give us 5 stars. We hope we've earned that from you. Remember to subscribe to our channel, and don't forget to hit the bell icon on YouTube so you can catch us live on some of these pop-up shows, and you could have your comments featured live on the show. We could have our guests weigh in, or myself or John weigh in on any questions you might have. So as always, until next time, Modern Commerce, we'll see you.